Hey everybody, good morning. Welcome to another live stream about NIO and quarterly earnings. Let's start slowly and do some housekeeping here so the channel the stream can fill up with people. So as always, I'll be doing 2 live streams today. I hope everything works out with the tech as always, like that there will be no interruptions and that my mic is working and my camera is working. So let me know in the comments if there's anything not working as well. I'm trying to check the comments every time as I can, and I just have one monitor today, so we'll be maybe missing on some of the live comments there, but I'm giving my best. I will always do my Q&A in the aftermath of going through this news release now, and then also showing you my personal expectations and the actuals. So that's how we always do it during those earnings. If you're tuning later, this is a live stream right now, so people can actually comment live here. Please send your questions if you have subscribed to this channel for more than 1 year. So yes, I value long-term subscribers here on the channel. Also an incentive for you to please subscribe to the channel if you haven't yet, and this gives us some live interaction today. However, if you're watching this later, it will be available as a recording, and again here the hint that you can watch both the earnings report, which will be just about going through this news release, and then later on the actual management call with the analysts. Usually the management call has more of the insight than the actual report. However, of course, the report are the financial fundamentals that will be taken in by Wall Street today. So I hear that everything looks okay here from the technical side, and we're now almost at 100 people in. That's great. It's morning here, or almost lunchtime in Germany. I guess the US is just waking up. And in China, yeah, it's already going towards dinner time, right? So let's jump into it. Before I jump actually in the news release here, I've already done a little bit of updates on my slides, or no, actually the Excel sheet. Let me just pull it up here. Share screen window. Where do we have it? The Excel sheet. All right. Because I want to walk you through my estimates. That's on the left-hand side versus the actuals that we've got. So this is the little work that I've already done in the background when I released the news report. And so we can see how it matches actually with my estimates. So I've actually estimated 2.2 billion in vehicle sales, so a little bit higher than the actuals, which came in just at 2.1 billion, but it's just a tiny couple bit of millions of a delta here. So that's not really something that's moving the bar here. Actually, my total revenues have been pretty much in line. 2.4 billion versus 2.4 billion, actually on point. I had other sales just at 200-ish. To be honest, I didn't put in any growth here compared to the last quarters, but it did actually go up a little bit, and so that's kind of making the overall total revenues even here. I'll come back to what the analysts are saying currently, but it seems like the first take is, well, it's a beat on the revenues, but not on the bottom line, as we'll see. So vehicle sales, 1.9 billion. To be honest, I had a growth in the vehicle margin of up to 13% of a vehicle margin. So I was more optimistic. I think last quarter, yes, we had 11% in the actuals. I thought we might get there with the larger, well, actually, yeah, to be correct, it's not a larger volume. It's just 50,000 cars compared to 55,000 cars. So it's nice to get this incremental vehicle margin growth in here to 11.9%, which is the actual number that came in. So it's 12% instead of the 13% that I was aiming for. But I was thinking, my rationale behind it was that I thought, we have the ES8 now, the full numbers coming in, because it took some time until the ES8 also was ramping up and making a dent into the earnings. It's a high margin vehicle and pretty decent sales numbers, by the way. And also we have, of course, NIO Park that is hopefully more in sync now and has some efficiencies there. Plus we have the macro theme of declining lithium prices, right? So that's why I was possibly a little bit more bullish on the vehicle sales, on the margin of the vehicle sales, but still 12% I think is roughly fine. However, this is possibly a negative here, which we can point out, is that the gross margins came in at just 7.5%, and I was estimating it could be around 12%. That is due to the fact that the other sales, the cost for the other sales have been actually much higher. So I was estimating in total the cost of sales would be around 2.1 billion, came in at 2.2 or more than 2.2. Yeah, this is kind of, let's say, a little bit more on the negative side, right? Both the vehicle margins as well as the gross margins coming in lower than my personal estimations. Still quite okay, I would say. I think these are not terrible developments here, except for possibly the gross margin, which could be better. But yeah, overall, definitely not a beat on my personal estimations. I have to say, I want to be honest with you here. Then for the research, let's go to the operational side. Research and development expenses, I've had them at 400 million and SG&A at 500 million. That was actually pretty much around the numbers of the last quarter. I thought they might be similar. I was not expecting yet to have a real decline in them because of some of the things that will happen. In terms of, some of the R&D will be likely behind us for example, the phone, for the sub-brands, for the NT 2.2, not the 2.2, but for the 2.0 platform. I think that will at some point give some relief to the research and development expenses. But they came in quite high at 560 million still. So I can only estimate that this is still maybe for some of the preparations for the sub-brands. It might be still for the NT 2.2 upgrade. It might be for the chips research projects that they're doing, and all of the AI themes on the autonomous driving side and so on, where they have definitely hired people. So that might explain some of the larger research and development expenses here. But definitely came in higher than I would expect it. So in general, the total operating expenses came in higher than 1 billion, 1.1 billion to be exact. And that's really on the bottom line leading to this loss of 756 million, whereas I had 613 million. So I was estimating that we could be just a tiny bit lower than the net loss of the last quarter. And I think, so this number here, the EPS of minus 32 cents, that's from the analysts, that's not my expectations, but that's largely in line with such an estimation. And now we come in at minus 39 cents. And that's definitely the miss that Wall Street will be talking about on the bottom line. And if you remember some of my videos, I've been talking about the net loss development, that this has possibly peaked out at some of the higher numbers, around 800 million in the past. And we should hopefully see a gradual decline of these net losses. So meaning this number going down, but here it's still quite high, close to those 800 million. That's personally something which, of course, I don't like because net losses have to come down in order to get to profitability. That's for sure. I mean, still just to finalize it here, we've got 8.1 billion in cash resources. I've estimated 8.8. Let's see. I'll have to double check where there might be a divergence. Of course, we had 2 billion raised with Abu Dhabi again. Overall, I would say this is a pretty comfortable cash cushion here, with a runway of around, let's say 10 quarters here, 2 years more or less. But I mean, what we still want to see here is this net loss decline, and unfortunately, that's not happening this quarter. So what I did like though was, if I go to the sales tracking here, just a tiny bit, and then I'll jump into the report. I was actually thinking they would guide towards 27,000 vehicles in Q1. And we actually got a guidance of up to, so the upper range up to 33,000. And that would be translating into a March delivery of 14,000 or almost 15,000 cars. That seems quite bullish to me. It would also be a year-over-year increase of 6%. And I was actually thinking, well, maybe we get in the first quarter an year-over-year decline of minus 12%. So this guidance, to be honest, is quite bullish, and a surprise to me. So in the past, the guidance has almost been quite conservative, and this time they are giving such an outgoing guidance. I'm not sure how they want to get there in March. It would be a huge leap to go there. I think the weeklies have been quite okay, over 3,000, but still it seems like a stretch to me. Let's see. Even if they go for the lower guidance, and that's the thing. Usually they really know the numbers more or less in advance. So this is kind of why I'm scratching my head here. If they are given such a guidance, so here we go. That's where they actually did give the guidance. Where is it? Business outlook. Deliveries between 31 and 33,000 vehicles. I mean, that's quite optimistic. Even the lower case, as I said, I was thinking around maybe 9,000 in March, and that would get us to 27,000 cars. So it looks like Q1 could actually be a good quarter and show growth overall, which is something that I think investors have not anticipated, to be honest. So yeah, this is my main takeaway. If you look at the headlines here, mixed earnings, misses the non-GAAP EPADS, and but beats on the revenues. So yeah, what's weighing more here is most likely that this net income still not looking good. The earnings per share still not looking good. Still not showing the trend for the. If we could look here in the financials, just let me have a look. The income statement. Just taking some time to load here. The net income, that's what we need to bring down in order to grow the stock as well. It doesn't have the Q4 earnings in here yet, but I want to see that going down to 500 million and less. And 2024 really is the year where we should see some of the effects starting, for example, with the employee, the cuts, the job cuts that they've shown, the taking the manufacturing in-house, which puts less of a burden on the JAC manufacturing fee and such. That will ultimately show up in the net income, in my opinion. But this quarter, it clearly hasn't. So yeah, that's kind of a first takeaway. Let's see if I missed anything in here. Please also let me know in the comments if there's any points that you want to point out, or anything that you've seen and highlighted. Oh wow, 233 people in the chat. That's awesome. Thanks everybody for tuning in again as well. Again, a little bit of housekeeping here. This is a live stream about the earnings report. I'll do a second live stream and live stream the management call and give also my commentary around it. And if you're tuning in later, maybe you're on the West Coast in the US, you're watching this as a recording, and I'll give my personal opinion here. It's not financial advice. It's just how I see it as a retail investor in the stock, and my personal expectations. So I would agree these are mixed earnings. To be honest, the earnings itself don't get me excited. I think they are largely behind my personal estimations and expectations. And I don't think that I have been like on a very optimistic side. I think I kind of mirrored a little bit the overall analyst expectations. So yeah, the financials themselves don't get me started, but the guidance, I think it's a head scratcher, and it's possibly something that the market is really looking for, showing growth in Q1. Do remember that NIO still has a couple of cards to play in the next couple of quarters. We just had some downgrades by JP Morgan on the topic that NIO doesn't have new cars, but the fact is that they are now already getting rid of the 2.0 platform and starting selling an updated platform from the next quarter, the 2.2 platform, and that could give a boost because I expect major improvements there on the cars, and the Chinese always want the latest tech. They always want to buy in what's new and not something that's already a couple of months old. So I do expect a boost from that. But it's funny that they kind of guide to boost also from for the March numbers already. Anyways, I'll take it. And a second catalyst, of course, is where we now have rumors today about the Model Y competitor. Let me see if I can find it somewhere here. NIO San Francisco usually is posting some updates. He might still be sleeping. Greetings to Jeff if you're watching this later. Let me go to CNV points. So here's been a leak for a Alps model spotted taking a hit at the Model Y here. So it's basically saying it's more awesome than Model Y here at the back side of the screen and of the window. And this is another catalyst that's coming at the let's see, maybe Q3, Q4, making some impact. And the fact that NIO might be showing growth in Q1, I think that's really unexpected. And that's maybe one of the insights that we get as a takeaway here from the earnings today. And as investors should be looking into the future rather than looking at what's behind us, maybe that's a way to digest the not so great gross profit margin here and the still high net losses. Let's see. Let's have a look at some of your comments here. Somebody is at the West Coast watching live. That's what I call commitment. Awesome. Yeah, appreciate that. Please smash a like. That goes a long way to give the channel a little bit more visibility. And if you also want to share it in your favorite investors community regarding NIO or Chinese stocks, I also really do appreciate that. I really enjoy having this community here. I think it's a very committed crowd of NIO investors, given the fact how bad the stock has performed in the last 3 years. You can see that there's clearly lots of people out there who do see the vision coming together, but slowly. And unfortunately, to our concern currently around the stock, the company is not going as fast as we wish. But it's tough as a startup, and the environment is currently still quite tough. And again, like with such kind of an outlook here, if NIO were to show this growth in Q1 and possibly the next quarters, that would be quite distinct because I think, for example, if you follow also Tesla, the story, they're currently facing some backlashes because investors are worried about the growth numbers of Tesla as well. I think they're doing quite fine still in China currently. However, the whole competitive landscape isn't looking good for Tesla either. They always have to cut their prices in order to retain their market share, and investors obviously don't like that either. Now, what's the growth driver for them upcoming? More price cuts? I don't know. For NIO at least, they're going to launch a couple of new models, and that even with the current models working quite well, if you compare it to, for example, another fully BEV manufacturer like XPeng, which is showing, in my opinion, disappointing numbers. So given the fact how high the NIO average sales prices are, and all of the issues they are facing with the competitors cutting prices, I think we should be, not overly bearish about these numbers here that NIO is putting out. Yeah, that's a good point, Andrea. There should be discounts on the NT2 platform if the NT 2.2 is coming out. So I'm definitely expecting that for March. And I'm wondering if they have already filled order books for this because of some of the discounts that have or incentives that are given. Basically, it's now something similar that we've seen before with the transition between platforms. Remember, if they cut out of the NT 1.0 platform, they actually just sold their inventory at some discounts and therefore, got rid of the cars that otherwise people would possibly not have bought anymore. And yeah, that's also a way of increasing sales. Yeah. All right. Any points that I missed in the report? I have to be honest, I didn't fully read through it. So usually, I think I commented on the most important financial KPI, and then there's usually some recent development highlights, deliveries. We know NIO Day, the launch of the ET9, coming in 2025. Listed in MIIT's catalog. NIO has completed filing process. Okay, that's related to them taking over the JAC manufacturing. The strategic equity investment, 2.2 billion from Abu Dhabi. Completion of the repurchase right. Oh yeah, that's possibly something that I forgot to calculate in my cash balance estimations. NIO actually repurchased some of the convertible senior notes that were due 2026. So remember, those note holders can either convert to stock or they can require the company to pay it back. So basically, it's kind of, in a way, a loan, but the loan is convertible, and NIO paid back those loans with the interest, and that's obviously also some cash outflow. So that's what's happened. We had a change in the board of directors. As expected, Abu Dhabi has appointed their own board members. And here's another technology license transaction. What is this? A subsidiary of NIO entered into a technology license agreement with 47 Limited. So that's Abu Dhabi. Okay, so NIO is granting non-exclusive and non-transferable worldwide license for NIO's existing and future technical information. There's some sort of deal going on between Abu Dhabi here and NIO based on a capital raise that has to do with licensing of NIO tech. From this note here, you cannot see much more around what will be the implications. So soon we'll get more CEO and CFO comments. Yeah, notable development recently was about an NOP Plus, which I find very exciting. Some videos about how NIO is going into urban roads and showing really advanced self-driving capabilities, some of them even mapless and vision only. So good stuff. And I think we will have a dedicated NIO event regarding this. So the CFO is highlighting the growing vehicle margin. It's double digit now, but ultimately we want to get to 20%. We need more volume for that and more efficiency increases in the manufacturing. Yeah, CFO, let's hope he's doing a good job today in the earnings call. I think there have been some reservations recently by investors towards the fact that he was raising money very late, not seeing the macroeconomic impacts recently. Now the stock has dropped a lot, even below the stock price where Abu Dhabi came in. Not a good looks, to be honest, on the CFO. The CFO, in my point of view, did some better job than the previous CFO that NIO had in place before, but most recently, I think, to be honest, if I were in Lee Bin's position, I would have made the CFO the scapegoat after coming out and promising very big numbers for 2023 and then not really executing on them, and then also raising money in a fashion that I think was scary to investors and too late, frankly, too late. But seems like he'll have some more chances. So let's see how it goes today. I think hopefully the earnings call will be where the analysts will be asking tough questions and asking a bit about recent improvements on the sales stuff, which NIO has promised that they will train them and get them up and running to execute better than before. That's where NIO said they have kind of a weaker position than some of the competitors. Yeah, and if they can kick off Q1 with growth in this year, then I would say that would be quite a validation of that, to be honest. I'm still skeptical regarding this guidance here. Would be a huge stretch in March, but as I said, today's number looked quite okay. So could be possible. Right. Nothing else that I saw in here. Here's another question. I'm taking so many questions from Andrea. Congrats. You're doing an excellent job suggesting when you should improve. In the past, I think I've highlighted some of your ideas before, and now you're asking Xpeng G6 and Seeker X failed to challenge Model Y. What do you think would be take for Alps to succeed? Yeah, I think that's kind of some healthy pessimism here regarding the sub-brand. To be honest, I think I mentioned it before in one of my videos. I'm expecting Alps to be a really, really boring car. And that's coming from my personal experience of subscribing or testing out NIO cars. So thanks again to NIO. The latest NIO ES6 or EL6 that I was driving to Italy and back as a weekly test was given to us as a press car. And before that, we've been subscribing to the ET7. We've been subscribing to the ET5. So we are paying for that and are just NIO customers and really testing out the customer experience. And after having the experience of all of these cars, I can certainly say my own perception of the car has changed a bit. So I was always also in the views that, for example, the ET5 could be this mass market challenger to the Model 3, but in fact, no, the car is pretty much too distinct. And so that's where I think NIO could make changes to one of these sub-brands in terms of that it's becoming, more of a car that the masses can accept. And what I'm meaning by that is you don't always want to stick out of the crowd with a too fancy designed car that's attracting the looks of everybody. You want to blend in a little bit more. Also on the utility side, there needs to be more pragmatism for the car. So let's say a large trunk maybe inside the car, and I'll do possibly a separate video on that. Now that we're having a baby, I think there's lots of room actually to improve on some basic functions of the car that help people, get on with their daily lives. And I still think, my perception has become that, that's also why NIO shouldn't slash prices, but NIO cars are really, really premium to luxury. They are have outstanding looks and quality and design, and it's just not for everybody. I can't imagine everybody just driving around with such a car. And so, the sub-brands, in order to beat Tesla, they need to become more boring and more pragmatic and offer frankly, a better value for the price. And that's hopefully where we see that NIO has done its homework and positioned it well. One thing I notice here with the spy pick, that the fact that they're just so outgoing here and basically take on the Model Y directly tells me that this will also come with a different narrative to it. NIO is a bit more subtle. They are not as outgoing, not cutting prices, not too offensive in their sales. I remember that also in China, that the sales executives are usually not pushy. However, possibly with the sub-brand, that's about to change. Maybe they become more aggressive, both in marketing as well as on the sales side. And that is not reflecting badly on the NIO brand, I guess, because it's going to be a separate brand. So that's basically the idea behind the sub-brands. And if all that's going well, then I could see something similar happening to what we're now witnessing here on the smartphone area. I just tweeted about this today. So Apple's China sales of the iPhone has tumbled 24%. They're losing to Huawei, and that's simply because the local competitors are becoming so much better than the overseas brands and companies. And I think, I really accuse the US policymaking for that. If they wouldn't have put such big sanctions on Huawei, or now also what they're trying to do with EVs and chips and biotech and so on, they wouldn't incentivize the Chinese brand to become domestically so strong. But that's about to happen, and this could be a story for NIO. So I think it could be a possible outcome that NIO is ultimately taking some sales from Model Y, which, to be honest, was never why I invested in NIO in the first place. I really don't like that EV versus EV wars. That's what I'm usually criticizing Elon Musk for, that he is bashing on EV competitors as well, and trying to talk them down. I think it's more about the ongoing conversion of ICE buyers to EV buyers. I think that should be the goal, converting everybody to drive battery fully electric, and it's not helping if we are playing the EV companies against each other, but obviously that's kind of a marketing trick to position it against the Model Y. So that's a quick take here on the sub-brands, but I do think it's definitely becoming a bullish catalyst for this year for NIO, that we are having this launch later on in the year. And let's hope we get a good statement during the earnings call, which will be in about 30 minutes. I'll also live stream it in another live stream. And let's hope we'll get some more insights on this earnings report, which, as I mentioned again, if you're just tuning in, I've went through the numbers through my personal expectations versus what's been reported, and a couple of analyst key takeaways, which have been beat on the revenues, miss on the bottom line on the EPS, and generally it's been below my personal expectations. It's not showing the trajectory of a decreased net losses currently. That's an issue, to be honest, but we'll see some of the factors kick in the next couple of quarters, and also due to the seasonality, Q1 and Q2 should have a much lower burden on the bottom line of the business, in my opinion. And now having also the guidance on the top level growth, yeah, should be hopefully good. So now it's behind us with some of the R&D investments there. And as I mentioned before on some of my videos, I think one of the largest drivers of the narrative around NIO Stock should be coming profitability of battery swap stations. We have got recent news around how additional revenue streams are currently generated in Europe and China regarding the grid balancing opportunities there, in addition to starting to charge for NIO swaps. So I do think once we get to a confirmation of that, then lots of the narrative around NIO's cash burn will change. And now, again, with the more than 8 billion in cash reserves, NIO can currently afford its trajectory. But in order for the stock to meaningfully go up, I think we should hopefully see the change in the trajectory of the net losses. And yeah, unfortunately, this wasn't a quarter to actually show that. So we'll see that this is now, again, will be coming in here once this graph is updated. Let me see if I can change it. Yeah, it comes in closer to here now. So it's still not showing the decline, but I think Q1 could be where we see the sequential decline. I mean, this is not a straight line. Yeah, maybe we don't get a decline in those net income numbers with each of the quarters. It's also a bit fluctuating, but hopefully seeing an overall trend here, right? That would be ideal. All right, that's it for now. I think I'll wrap it up here, and stay tuned on the channel. I'll post another link now for my live stream of the earnings call, which will be management talking to analysts, and then I will also add my comments before we get all of the insights that are hopefully will be plentiful and more than what we've got here in the earnings report. Thanks everybody for tuning in. I appreciate that. Please hit a like and share it, and you can consider becoming a patron and support this channel, and also get additional insights and chat with us on a daily basis here. Thanks for watching, and see you in the management call.